Hello all of you, I hope you all are doing good. Today we are going to revise accounting standard 5, that is net profit or loss for the period, prior period item and change in accounting policy. This is the only accounting standard which exclusively talks about profit and loss account. So very simple accounting standard. Now imagine profit and loss account in your mind. Okay, this is suppose profit and loss account. This is profit and loss account. So when I see is profit and loss account, there are so many items come in my profit and loss account. Okay, to make it simple. Okay, we write it down as per the schedule 3. We write it down income, then expense. Okay. Now in my profit and loss account, there's so many types of items come in profit and loss account. Example that here, ordinary activity. Okay, I will discuss each of them in detail with you, but I'm giving a background of what is this AS5. So they talk about there are certain items which comes in my P&L account, ordinary activity. Okay, it might be extraordinary item, it might be prior period item, it might be change in accounting policy, it might be change in accounting estimate or change in accounting policy. So in my P&L account, when we prepare profit and loss account, there are so many items which come in P&L account. So we'll discuss each of them. Okay, so accounting standard 5 says how to present these items in my P&L account. But why it is important? How to present? What does it mean? How to present in profit and loss account? Because in my P&L account, when we prepare profit and loss account, there are different types of items come. Ordinary activity from core nature of business. There might be some extraordinary item like the fire, okay, which is clearly distinct from the normal nature of business that here. Okay, like the fire happened. Then here prior period item, there are certain error which we have done in previous year. Now we are rectifying it. It might be happen we are changing the accounting estimate. It might be happen we are changing accounting policy. So these profit and loss account, there are in these profit and loss account, so many items are coming. So they say how to present those items in profit and loss account. So these accounting standard exclusively talks about only and only profit and loss account. So what happened now? Imagine P&L account. In my P&L account, mostly what happened, current period item is going to come. It is this year income and expense. Rarely it might be happen. We have done certain error in past. Now we are rectifying during the current year. We call them prior period items. So that might be come in P&L account. So in current period item, I might have what we have. We might have ordinary activities. It might be extraordinary items here. Or prior period item means certain errors we have done in the past. Now we are rectifying it. Or in my P&L account, there might be some change in accounting policy and change in accounting estimate. So we are discussing here how these items should be present in P&L account. So what we'll do that here. First, we will discuss about introduction. I already discussed with you this introduction. Okay. But we will see each of them, these 5 items. We'll see each of them individually that way. We'll discuss what to mean by it and how to present in P&L account. So simple. So simple it is. Okay. So let's start it that way, one by one. So first is introduction that way. It says AS5 prescribe how items are often shown in the profit and loss statement to maintain uniformity and comparability. So how to present in P&L account, that we will discuss here. This is what AS5 talks about that here. Okay, it should be so what for us comparability is will get simple and the uniformity. Okay, same type of presentation every year we are doing. Second, it says all income and expenses of a period must be included. Obviously, income and expenses for the period should be included in P&L account to determine the profit or loss. Now, these items are classified into 5. What? Ordinary items, extraordinary items, prior period items, change in accounting estimate and change in accounting policy. So, we'll discuss each of them in detail and how to present in P&L account. We'll discuss here. So simple. Okay. Now, let's start with first. That is what? Ordinary activity. What do you mean by ordinary activity? Ordinary activity means that here any income and expense arising from ordinary course of business of entity. Okay, from the core nature of business. But it is very important to note that when we talk about ordinary activity is classified into 2 categories. Further, it is divided into 2 parts. Okay, so ordinary activity of first is of what? Special nature. And second is that other ordinary activity. So now understand this part. So here ordinary activity, we are classifying into 2 categories. Special nature and other ordinary activity. Now understand this point. So what happened in ordinary activity when I talk about the point number A, special nature, Who specify the special nature? It is specifying accounting standard 5 only. There are 7 items. So these 7 items, who mentioned these 7 items? Okay, there is no 6, no 8. Exclusively these 7 items only mentioned in accounting standard 5 itself that year. Okay, so these 7 items, all these 7 items is going to, it is odd, it may look like it is not ordinary activity. When I will read it, you may think, no sir, it is not ordinary activity. But if I say no, it is ordinary activity. Here it is written that unusual in nature. Still, it is an ordinary activity. It may look, it is not happening, these items are not happening regularly that way. But still, it is called ordinary activity because that is from the business only. That's why they call it ordinary activity. But these 7 items, even though we are calling it ordinary activity, but they are of special nature, like in family. Okay, the senior members, okay, they are from the family only, but they are special that year. Okay, like that. So ordinary activity, it's a one family, but under these family there are 7 people are of the special nature. Okay, so we will give them some priority. So first, let's talk about what are those 7 items. Listen carefully. First, it says profit or loss on sale of PP, that is property, plant and equipment. So profit or loss on sale of PP, profit or loss on sale of what? Investment. Okay. Now, the written down of inventories to net realizable value as well as the reversal of such written down value. We have already covered accounting standard 2. What happened? How we record? We record cost or NRV, whichever is what? Lower. Suppose my cost is 10. NRV is 8. Suppose I will record at what? 8. So that is a written down. But suppose here, now what is reversal that here? Reversal means that here, suppose cost is suppose 10 again, and suppose NRV is now 9. So previously we recorded NRV at 8. So cost or NRV, whichever is lower, so we recorded 8. Now when I compare here cost and NRV is 9 now. So we're reversing it from 8 to 9 we are moving. Okay, that is reversal. Okay. So if any written down of inventory, then that is also ordinary activity but of special nature. So profit or loss on sale of, come on, repeat with me. Okay. Profit or loss on sale of what? PP. Profit or loss on sale of what? Investment. The written down of inventories that is, and reversal of those. Okay. Now a restructuring of the activities, okay, of an enterprise and the reversal of any provision for cost of restructuring. Now understand what is restructuring. Certain time we do for example, with the one division that here that we want to discontinue. Okay, we are doing the restructuring there. Okay, when I say out of 10, 1 we are closing now. So we might create a cost of restructuring that here. Okay, now what happens then when we do the restructuring that here? Now it might happen we might give certain compensation to the employees, those who are working exclusively for that division that here. Okay, so what happened that here? That when we create a provision that here, for those type of expenses for the restructuring that year, that is also ordinary activity but of special nature. So what is this reversal? Reversal means certain provision that we have created. Now we're cancelling it. For example, we create a provision by rupees 10 lakh. Now I'm cancelling by 2 lakh. So that 2 lakh is a reversal. So both creation of we are creating a provision or reversal of that provision. Both are what? Ordinary activity but of what? Special nature. So 4th point. Profit or loss on sale of PP, profit or loss on sale of investment that year, the written down of inventory, restructuring of the activity of an enterprise, reversal of provision, and what? Now, the 5th, legislative changes having retrospective. Certain time what happened? Some changes come in law, and this is retrospective. For example, that here, we've claimed the input, under the GST, you claim the input part. Okay, input GST, you claim it. But now suddenly law comes that they say no, retrospective effect we have to given. Whatever input VAT you have claimed in the input GST you have claimed in the last 6 months that year, that has to be cancelled that year. So GST you have claimed the input VAT on that. When you claim the input, what is going to happen that here now? That input, suppose I'm just giving an example, hypothetically I'm creating example that way. Okay, so what happened that now suppose government say whatever the input GST you have claimed in the last 6 months, that has to be cancelled now. So when I say that has to be cancelled now that here, so suppose the law, the retrospective effect is here. So then you're giving the effect of those, that is also what? The this ordinary activity but of what? Special nature. So first, profit or loss on sale of PP, profit or loss on sale of investment, the written down of inventories that a restructuring cost or legislative changes having what? Retrospective, not prospective. Certain, rarely it might happen. The law comes, they say retrospective effect we have to give. Those are also what? The special nature. Then litigation settlement, some cases going on and the settlement comes that here, the litigation settlement and other reversal of provision. Other reversal means any provision that we have created. That is not a special nature, but reversal means we are cancelling the provision. that is of what special nature. So remember, these 7 items might look like, sir, this is not extraordinary, this is not the ordinary item, but listen that these are ordinary item and it is not an extraordinary, not an what extraordinary. These all 7, okay, are special nature ordinary item. Okay, now this AS5 talks about how to disclose it in profit and loss account. So how will you disclose it that here now? Nature and amount of such item should be disclosed what? Separately. So can I club it with some other item? The answer is no, we cannot club it with some other item. It has to be shown what? Separately. Now, they say other ordinary. Other than these 7, they say if the item of income and expenses from ordinary activity are of such size, nature or incidence that their disclosure is relevant to explain the performance. So these 7 are ordinary, special nature ordinary activity. We don't have an option but to disclose them what here? But to disclose them what here? The separately only for those 7 items. Okay. But what happened in point number B? It says that here now that if item of income and expense, that is from the ordinary activity. I'm not talking about these 7, other than these 7. Okay. Like the salary, purchase, sales, all these are ordinary activity. Okay. Office expense. They say if this size, nature or incident that their disclosure is relevant to explain the performance. So certain time it is necessary that here to, for example, I have we import something, so I'm liable to pay in suppose in USD dollars that year. So when I'm paying them in dollars, market value, the exchange rate might get fluctuate that year. So there might be some exchange gain or loss. So what happened that year? They say no, because their nature is like that, we have to disclose them what separately. So certain time it might be happen that because of the size and nature or incident of that particular ordinary item that year, it is necessary to explain them what? This is necessary that year to present them separately to explain the performance that year. Okay. In that case also we have to also mention them what? Separately in profit and loss account. So what it says ordinary activities, 7 items. We have to present them separately. We cannot club those items in P&L account with other items. And other ordinary activity, if their size, nature or incidence is relevant to explain the performance, then also we have to disclose them separately. Okay. Now I'm coming to the next point. That is extraordinary item. When it comes to the extraordinary item, what does it mean when we talk about extraordinary item? They say which is clearly distinct from the ordinary, which is clearly distinct from the ordinary activity, not expected to recur frequently or regularly. For example, loss due to earthquake, fire, flood, riots, all these are extraordinary items. Now, very interesting part that here, if you see in this table, they say separately disclose. Now, interesting part, in a manner that its impact on the current profit or loss can be perceived. Now, very important point. Now, what happened when we talk about the ordinary activity, this is separately disclosed. Even though in IC study material, when you will see the answer, certain time I observe that they also in case of extraordinary item, just they write it down, separately disclosed. But understand this one. A5 says that separately disclose in a manner that its impact on the current year profit or loss can be perceived. What does it mean that here? It says that extraordinary item separately disclosed in a manner that the impact on the current year profit or loss can be perceived. You know that is for the Schedule 3 of Companies Act 2013 when you talk about the financial statement. How to present the P&L account in that also, they bifurcate that here. How much profit you have before extraordinary item and then extraordinary item and how much profit you have after extraordinary item. It means, let me write it down that here. Profit before extraordinary item. Okay, suppose it is 10 lakh. Okay, now I suppose I say this is the extraordinary item. Extraordinary item. Suppose this is 2. How much profit I have after that? Profit after extraordinary item. Don't you think so? We have disclosed them separately. We have disclosed them separately in a manner that its impact on the current year profit or loss can be perceived, can be seen. I can see that before the extraordinary item, how much profit we have? 10 lakhs. How much profit we have after extraordinary item? 8 lakhs. So this is how you have to present the answer in examination. You cannot say that separately disclose. No. Separately disclose in a manner that the impact on the current year profit or loss can be perceived. So we have you have to write it down like this. So you can see that. What does it mean that? You have to not just separately disclose. Separately disclose in a manner, I can see that because of that extraordinary item, how it is affecting my profit or loss. I can see that here. Before extraordinary item, we have a profit of 10. Now after extraordinary item, we have a profit of what? 8. This is how you have to write. This is what does it mean that here. Okay. Now we talk about the extraordinary item. Okay, so we discuss here about the ordinary, then special nature, other ordinary activity, then extraordinary item. Now we will discuss about what? Next one. That is what? A prior period item. Now what happened here? What do you mean by prior period item? First, you have to understand the meaning. Prior period item says that errors in the preparation of the financial statement or one or more prior periods discovered in the current period. To make it simple, we have done certain error in the past. Now during the year we come to know about it. Now we are rectifying it. Okay, that is prior period item. So it says that, example, we have done the wrong calculation of depreciation, we have incorrect rate of depreciation, non-provision of gratuity payable under the law, capital expenditure treated as a revenue expenditure or revenue expenditure treated as a capital expenditure, non-provision for taxation, non-provision for doubtful. To make it simple, we have done certain errors that year. Okay, now what happened, that this is a prior period item. So we have done certain errors in past. Now we're rectifying it. We call them prior period item. So they now understand, very important point here is that prior period item does not include. Okay, this is important. What it says that here, the prior period item does not include. What it does not, it may look that it's a prior period item, but it is not a prior period item. Now listen carefully. There is a changes with retrospective, not as per the law. But what happens, suppose in the company, now understand this point here. Let me give an example that here. Suppose in a company that year, we were paying salary from the last, let's say the 8 years, example that is 50,000 per month. Okay, to an employee, we were paying 50,000 per month from the last 8 years. Now during the current year that year, the top management say no, it should be 60,000 per month, but not from today. Retrospective effect. Okay, it is not a law. Okay, I'm not saying that it is not a, now management decided that here, now we have to give them what? Not 50,000, we have to give them 60, but not from the current year. They say not from the current year. They say we have to give the retrospective. So changes with retrospective effects. So we decided we don't have to pay them 50, we have to pay them 60. But even in the past 8 years, we paid them only 50. Now we have to pay them 60. So whatever the short amount, 10,000 per month we have paid in the past for the last 8 years, that amount also we have to pay. So some may argue, so no. In the past we recorded only 50, but now you're paying to pay them 60 for the previous 8 years also that year. So it's a prior period. No, it is not a prior period item. At that time, in the last 8 years, we will know that only that amount of salary is 50,000 only. So we recorded 50 only. Now you are doing the changes. And telling us that here we have to give the effect. So it is not a prior period item that here. Okay. So whenever there is a retrospective effect, we are giving that here. It's not a prior period because we have not done in the error in the past that year. It's ordinary. It will be treated as ordinary activity that year. Okay. Now it is not a prior period item that. Okay. Now changes in accounting estimate. So what happened? You know that I will come to accounting. So next point is that only. When we talk about the change in accounting estimate, the people say that here, and let me, change in accounting estimate is very normal in business that here. In fact, we consider it very ordinary, very normal in business. Let me give an example that here. Suppose we assume that here the life of the fixed asset is 10 years. So we are going to depreciate over a period of how many years? 10 years. Now we decided that after 8 years, no, the life of the asset should not be 10 years, it should be 12 years. So there is a change in accounting estimate. Initially, we presumed that the life of an asset will be 10 years only. Now after 8 years, we decided that it will be more 4 years. So 8 plus 4, that is only 12 years. So does it mean we have done certain errors in the past? No. Change in accounting estimate is very normal in business that year. For example, you made a provision by 5%. But actual bad debt is only 4%. So does it mean I will call to my account receivable, my data? Listen, we made a provision by 5% only, but you have done the bad debt only 5%. So do 1 more percent bad debt, so it will match. What is this? I'm going to say that here, we are estimating certain things in accounting when you do the accounting. And we change that estimate. And that is very normal in business. So don't call it as a prior period item if there is a change in accounting estimate that year. Okay. So when it changes in retrospective, like example, the wages, we have revision of the wages from the retrospective effect or changes in accounting estimate that year. These are not prior period items. So if we have done certain error, we have the information in the past, we have done certain error that year, then we call it a prior period item. For example, we have done the wrong calculation of depreciation that year, incorrect rate of depreciation. So we knew that in the past the rate of depreciation is 10%, instead we apply 9.5, 12, whatever is that year. That is a prior period item. We have done certain errors that year. Okay. Now how to disclose this prior period item? separately disclosed in a manner that its impact on the current year profit or loss can be perceived same like extraordinary item. So both extraordinary item and prior period item should be disclosed in my profit and loss account in such a manner that the impact on the current year profit or loss can be seen. So what does it mean that I can see that because of those prior period item and extraordinary item, how it is affecting my profit and loss account? Okay, so when we write it down for the ordinary special nature that here, remember that where you have to just write it down separately disclosed in P&L account. Don't write it down in the manner that impact on the current year profit or loss can be seen. No, that these item only for the prior period item and extraordinary item. Okay, now we are coming to the next point, that is change in accounting estimate. What it says that a change in accounting estimate. What happened? Okay, just 1 minute. Okay, now what is change in accounting estimate? Now listen carefully. When it's come to the change in accounting estimate that here, it says that here now, first of all, what do you mean by change in accounting estimate? We made certain estimate in the past that here now. Now we are, what we are doing that here, now we are changing the estimate that here. Okay, for example, we assume that the life of the asset will be how many? Suppose 10 years. Now after 8 years, we change that, now it should be 12 years. Now we made a provision by 5%, then we decided it should be 8%. So we're changing the estimate that here. Now why the estimate changes here? The estimate changes here. Changes occur due to the change in what? Circumstances. So when it says there is a change in the circumstances, situation changes based on which estimate was made in the past or as a result of what? New information. Now understand these 2 points. Situation changes that is. Suppose we have a machinery in, let's say that here, example in Delhi. Now we want to shift from Delhi to Chennai. When it's come to Chennai that here, maybe suppose, due to the change in weather or the coastal area, suppose that here, or near the sea that here, we are installing that machinery that here. That is going to change the life of the machinery that here. So because of the change in circumstances, the life changes here. Or new information. Initially, I assumed that life should be 10 years. Now here, that engineer comes and he has specialized knowledge and says, no. The life should not be 10, it should be 12. So new information comes out here. Now the building, we assume the life is 20 years. Now the civil engineers comes, architect comes, he says that no, the life should be what? 25 years. So what happened that here? New information comes, because of that, my estimate changes that here now. So is it change in accounting estimate something extraordinary? No, it is very normal in business that here. Okay. Now revision are natural and do not qualify extraordinary item or prior period. Now remember that here now. That here change in accounting estimate is what? Which is natural. As I told you that here, it is not extraordinary item. It is not a prior period item, which is very normal in business that here. Now next point, it says that a change in accounting estimate affects the what? Net profit or loss. Now listen carefully that here. What does it mean that here now when we talk about the change in what? Accounting estimate that is going to affect my profit and loss account that here. Now please listen carefully. So when I say that it's going to affect my profit and loss account that here now, it might affect only current period or it might affect the future period as well. Current and future, both of them here. Now please understand this point. It says that here changes in accounting affect profit or loss that affecting current period including that net profit. For example, the change in the amount of bad debt estimate impact the current period only. So there is change in the estimate of what the bad debt that year. So it will affect my P&L account, but what the current year. But for example, if I change in estimate, for example, the life of the asset. So the amount of depreciation is going to affect in future as well that year. So in that case here, it might be happen because of change in accounting estimate. My current year profit only affected, or it might be happen current year and in future also profit might get affected. So they say change affecting current and future period, including the net profit or loss for the period of change in what? And future period. Example, changes in useful life of asset impact current and future periods what? Depreciation that is. Okay. Now, next point is that here now. Next one, consistent what? The classification. So what does it mean that here the consistent classification? It means that it says that here changes in estimates classify using what? Using the same classification. So it means that here now we have done some classification in the past. For example, there is a change in accounting estimate in the life of the asset. So what it is going to affect my depreciation. So they are saying that depreciation is coming under the category of depreciation. So the classification should not be changed. For example, if suppose in the past we have shown under administrative expense, it should become under the administrative expenses that is. Okay. So there is no separate heading for the change in accounting estimate. So whatever the classification we have made in the past, under the same classification, it is going to come in the current period. Okay. Now, what it says that here now, disclosure. This, now listen carefully. Disclose nature and amount of estimate charges materially affecting the current period or expected to have material effect in the future period that year. What does it mean? So what does it mean that when say disclose nature? Nature means that here now means what change. Example, the life of the asset. That is the nature. Life of the asset we are changing. Amount means how much it is affected profit or loss due to the change in accounting estimate. How much my profit or loss is going to be affected. Of estimate changes materiality affecting the current period or expected to have material effect in the futures. Material effect means disclose only if it's significant. Okay. Then it say it might be due to change in accounting estimate, they're affecting my current year profit. Like as I said that in case of a change in estimate for the bad debt. Okay. Now actual bad debt might be different. So amount get affected in profit or loss. Or it might be happen because of change in accounting estimate, my current year as well as future period is also going to be affected. It means in terms of profit and loss account I'm saying. So here we discuss about that what? A change in accounting estimate, and the last part is what? A change in accounting policy. And change in accounting policy is not new for you. We've already discussed about change in accounting policy in ES1, but there are one or two items is going to be additional here. I will discuss with you. Okay, what is this here? Change in accounting policy. What do you mean accounting policy? First of all, accounting policy refers to specific accounting principle and methods of applying those principles. Okay, so can we change? We have already discussed the meaning of accounting policy in ES1 that year. So what is this accounting policy? Can we change the accounting policy? Yes, we can change the accounting policy if it is required by law or accounting standard says to change it or for proper presentation. Okay, so we discussed these 3 points in ES1. So any changes in accounting policy with a material effect in the current or expected to have in a later period must be disclosed. Now, how to disclose that here? Listen, if I say change in accounting policy, material effect is going to happen in the current period. So amount we can ascertain, for example, that here we were following that here FIFO method. FIFO method. Now we want to shift to weighted average method. So what happened that here? Now under the FIFO it was 10. Now it is coming how much here? 8. So I can ascertain that how much it is going to affect my profit that here by 2 lakhs that here. So amount should be disclosed that here. Now if I say that here FIFO, now we want to shift to weighted average method that here now 8 that here. What is going to happen when we say from FIFO to weighted average method when we want to change it that here? What is going to happen that here now? Under the FIFO, if I am not able to find it out how much the closing stock if we follow the previous method here. So fact to be disclosed that we are changing the accounting policy, but we are not in a position to disclose the amount how much my profit or loss is going to be affected here. What does it mean? That it might be happen due to change in accounting policy. My current year profit is not affecting, but in future it is going to affect that. So that we have to disclose in the current period that year. Obviously, we cannot disclose the amount that year because the effect is going to come in future. So we'll tell them that here we are changing the accounting policy. Due to change in accounting policy, the effect is going to come in the later period that year. That we have to disclose, not amount, but we have to mention in the current year notes to account. That is change in accounting policy. Now this is new for you. Okay. Now, not a change in accounting policy. 2 cases that here now. We don't call it a change in accounting policy. Listen carefully. First, it says that here, adoption of accounting policy for event or transaction that differ in substance from previously occurring event or what? Transaction. So what does it mean that they say? We are basically here adoption of accounting policy that here, but that just differ in substance. So it will be easy for you to understand through an example that here. They say that introduction of a formal retirement gratuity scheme is a formal obligation. Now, employer will pay to the employee the retirement gratuity benefit that year. It's formally announced that year now. But in place of ad hoc ex gratia means no formal obligation previously. Now, previously voluntarily we gave them. Now we formally announce it. Now we have on us we have obligation that we have to pay this gratuity that. So what does it mean that here? People say it's a change in accounting policy. No, it is not a change in accounting policy. Now it's a formal obligation. Previously, there was no formal obligation. That's it. The differ in what? Substance. An example that I have covered here is a very common example which asked by the ICI that is. Okay. Now, adoption of a new accounting policy for event or transaction which did not occur previously. It means we here what we have done that here we introduce a new accounting policy which was not previously followed. For example, that here entity decided to pay the pension to employees on retirement. Earlier there was no such a scheme of pension in the organization. So previously we are not doing any kind of pension. Now we are giving pension. So this is not a change in accounting policy. It is introduction of what? accounting policy. So what we call them introduction of accounting policy. Is not change in accounting policy. So differ in substance, not a change in accounting policy, and we introducing new accounting policy, that is also not a change in accounting policy. Remember these two examples, from the formal from the no formal obligation to formal obligation, or from the introducing a new policy which was not earlier. That is also not a change in accounting policy. Basically, it is introduction of a new accounting policy. Okay, so this is all about accounting standard 5. What we'll do that here quickly, I will cover in just 2 minutes and then we'll solve question. Okay, so what is this AS5? That is, AS5 talks about how to present the item in profit and loss account. Ordinary activity from the core nature of business. Two type of ordinary activity divided into two categories. Special nature, 7 items. Profit or loss on sale of PP. Profit or loss on sale of investment. Then here litigation, settlement, legislative, or then they say litigation, settlement, legislative changes having what? Retrospective effect. Restructuring that. Okay, reversal of provision and the inventories. Okay, these are the 7 items that has to be shown separately. Other ordinary item, if the size, nature, or incident is relevant to explain the performance, then we have to present them separately in penal account. Extraordinary item which is clearly distinct from the ordinary activity, like the fire, flood, okay, riots. Okay, how to disclose them? Separately disclose in a manner that impact on the current year profit or loss can be seen. Okay, prior period items means we have done certain error in the past, now we are rectifying them. How to present them? The prior period item should be disclosed separately in a penal account in a manner that impact on the current year profit or loss can be seen. Change in accounting estimate when it's come. Now change in accounting estimate happens because of the new information or changing circumstances that year. Because of change in accounting estimate, it might be happen, it is affecting only my current year profit or loss. It might affect my future profit or loss as well that year. So we have to see that we have to measure nature and the amount that how it is affecting my penal account. Okay, profit and loss, I mean to say. Now change in accounting policy that year. Accounting policy means that here now, that is accounting policy means the specific accounting principle and methods of applying those principles. Can we change in accounting policy? Yes, if it is required by law, accounting standard, or for proper presentation that year. When we change the accounting policy, it is going to affect only my current year profit or loss. What does it mean that here? So it might affect, if we can find it a profit, how much it is going to affect my profit or loss, we have to disclose the amount. If we cannot find it out, disclose the fact that we cannot find it out. Or if due to change in accounting policy, it is going to affect my future profit or loss, that we have to disclose that it is going to affect in later period that year now. But under two circumstances, we don't call it a change in accounting. We don't consider the change in accounting policy when there is a change in what? The differ in what? The substance that is, as I gave you the example of these ex gratia, the payment, ad hoc ex gratia payment of gratuity to the formal retirement. Okay. Now what is this introduction of a new accounting policy? That is also not a change in accounting policy. This is all about accounting standard 5. Okay, so I told you that earlier. AS is not at all, not just AS. All the chapters of advanced accounting is not at all difficult. Very simple that. Okay. Now what we'll do that here now? We will cover the questions here. Okay. Now come to question number here now 19. This the company finds. Okay. The company finds that the inventory sheet on 31st of March 2021 did not include 2 pages containing details of inventory worth of rupees how much? 14.5 lakhs. Said how you will deal with the following matters in the account of Omega Limited for the year ended 31st March 22. Now please understand the question first. What happened that here now? It says that here now that is 2 pages did not include the 2 pages. What does it mean did not include the 2 pages that here now? They say in when we're doing the counting of the inventory that here. So in my counting, when we do the counting by mistake, we missed 2 pages that. So it means we have not properly recorded the amount of inventory last year. And it's a prior period item. Why? Because we have done certain error. Now when we counting the 2 pages, we're missing in the inventory. So we have not considered, and the value is given the 14.5. It's a prior period item. How to show prior period item? First, you have to explain what do you mean by prior period item and how to show them. Separately disclosed in a manner that impact on the current year profit or loss can be seen. Okay. Now, question number 20. Now, they say the accountant of Mobile Limited has sought your opinion with a relevant reason whether the following transaction will be treated as a change in accounting policy or not. For the year ended 31st March 2017, you are required to advise him in the following situations in accordance with the provision of AS5. So they're asking you that here now. Is it a change in accounting estimate or not? Let's read one by one. A provision for doubtful debt was created 2% till 31st March 2016. Now from the financial 16-17, the rate of provision has been changed to 3%. No problem. So previously we created a provision by 2%. Now we're creating by 3%. No, no means this is not a change. This is not accounting policy. They ask you whether it's the accounting policy or not. No, it is not an accounting policy. It's a change in accounting estimate. Okay. Now, or you can just write it down. Change in accounting estimate, not is change in accounting policy. During the year ended 31st March 2017, the management introduced a formula. Same example. The formula gratuity scheme in place of ad hoc ex gratia payment to employees on return. As I told you that here, this is not a change in accounting policy. We don't treat it as a change in accounting policy because just a change differ in what substance there. That is not a change in accounting policy. Now, till the previous year, the furniture was depreciated on a straight line basis over a period of 5 years. From the current year, the useful life of furniture has been changed to 3 years. So previously, we assumed the life of the asset is 5 years. Now we assume that the life of the same asset is 3 years. So change in accounting, estimate that here. And it is also not a change in accounting policy. It is a change in accounting estimate, which is very normal in business. Now management decided to pay pension to those employees who were retired after completing 5 years of service in the organization. Such employees will get pension of rupees how much? 20,000 per month. Earlier there was no such scheme. What does it mean that earlier there was no such scheme? What does it mean that here now? Earlier there was no such scheme. It means that here now it's an introduction of a new policy, not a change in accounting policy. It is not treated as a change in accounting policy. Okay, as I told you that here they differ in substance, and introduction of new policy, that is not a change in accounting policy. We don't call it a change in accounting policy. Now the last one, during the year ended 31st March 2017, there was change in cost formula in measuring the cost of inventories. What does it mean now? Now cost formula means that here, for example, we are moving from FIFO to weighted average method. Is it change in accounting policy? Yes, it's a change in accounting policy. You got the point? Simple. Okay. Trust me that here, you have so much of potential. You are going to score, even though only through these revisions, you are going to score 60+ in advanced account. Be positive. You have so much of potential. Just listen carefully. And I always say that when someone joins the regular batch or the EO batch, I always say the target for the 80+ in account. And you can, student can score that much of mark. That is easy to score that. The reason is that here now is this subject, advanced accounting subject itself is not a difficult subject. It's a very easy, simple subject. It is that here. Just you have to focus on the concept, okay? And you should have a proper strategy that here, okay? Now, next question. They say, Shama was working with ABC Limited, drawing monthly salary of rupees 25,000 per month. So her salary was 25,000 per month. She went on a maternity leave with pay for 7 months. So she was on maternity leave for 7 months from 1st of January 2017 to 31st of July 2017. Her salary for 3 months was not provided for in the financial statement for 16-17. It means the last financial year they didn't provide these for how many? For 3 months. I will explain for 3 months salary. I will tell you what is this 3 months. When she joined after leave period, the whole salary for 7 months was paid to her. You are required to pass the necessary journal entries in financial year 17-18 to record the above transaction as per the accounting standard 5 and state reason for the same. Now please understand this point here. She went on maternity leave on 1st of January 2017 that year. Okay. Now she was on leave for 7 months, so till 31st of July. Year ends on 31st of March. So we didn't pay her for these 3 months that year. When she joined here on 31st of July, we pay here for the 7 months. Her salary was 25,000 per month. For the 7 months, that is going to come how much here? 1,75,000, correct? Yes, 1,75,000. Okay. Now what happened that year now? But these outer 7 months, 3 months belongs to last year. Na? So that 3 months expense should be recorded in last year. It means we have done certain errors in the past. Now we are rectifying it. So for the 4 months, no problem. 4 months, no problem. 25,000 multiplied by 4, that is salary for the current year. But for the 3 months, which is of the last financial year, so it is a prior period item that year. So entries, prior period item will be debited that year and bank account will be credited because we paid 1,75,000. Now they change the situation in point number 2. They say, would the treatment have been different if Shama was terminated, okay, on 1st of January and was reinstated in service by the court with effect from 1st of August 2017 with instruction to pay Shama's salary for the intervening period, that is from 1st of January to 31st of July that year. Now understand this point here. What happened that year now? When we say terminated that year, so we have not done, and we didn't do any mistake in the past that year. The reason is that here, we didn't pass the entry for these 3 months and nothing wrong in that because she was terminated here. She was not on payroll that day. She was terminated here. So we didn't pass the entry, nothing wrong in that here. Okay. So therefore, in second case, it is not a prior period item. But when she reinstated on here on 1st of August, so we pay for 7 months. So that is salary account debit to bank account. It is not a prior period item here because she was terminated here. So simple that here. Okay. So we have covered the questions that here on accounting standard 5 also. Now next session will be on the accounting standard 7 construction contract. So many students are asking me for the financial statement of company and other chapter. Don't worry, a separate marathon is soon is going to come on financial statement and amalgamation, consolidation, all those big chapters. Don't worry for that. Okay. So that is for today. Take care all of you. Bye bye.